item. Add depreciation. In 2019, 3,263,867 in 2020, 3,402,496. Add amortization charges. In 2019, nil. In 2020, $32,292. Add finance costs. In 2019, 3,563,314. In 2020, $2,839,706. Adjust for prior year adjustment. In 2019, minus $2,193,661. In 2020, minus $1,390,823. Prior year depreciation. In 2019, $7,246,722. In 2020, $133,400. Give you total of, in 2020, $4,711,872. In 2020, $3,952,797. Increase in inventory. In 2019, minus $105,493. In 2020, minus $910,370. Other receivable and advance payments. In 2019, minus $5,731,920. In 2020, nil. Increase in trade and staff debtors. In 2019, $14,600,220. In 2020, minus $7,106,486. Increase in trade payables. In 2019, $3,405,831. In 2020, $11,344,635. Increase in tax payables and VAT. In 2019, $2,500,084. In 2020, $5,420,953. Give you total in 2019 of $19,380,594. In 2020, $12,701,528. Income tax paid. In 2019, minus $5,344,224. In 2020, minus $415,400. Interest paid. In 2019, minus $3,563,314. In 2020, minus $2,839,706. Cash flow from operating activities is $10 million in 2019, $10,473,056. In 2020, $9,446,422. Investing activities. Purchase of property, plant, and equipment. In 2019, minus $14,268,647. In 2020, minus $8,841,986. Purchase of intangible assets. In 2019, minus $161,460. In 2020, nil. Cash flow from investing activities in 2014 is minus $14,430,107. In 2020 is minus $8,841,986. $986. Financing activities, increase in long-term loans. 2019 is $10,649,579. In 2020, minus $8,566,112. Cash flow from financing activities. In 2019, $10,649,579. In 2020, minus $8,566,112. Net increase in cash and cash equivalent. In 2019, $6,692,528. In 2020, minus $7,961,676. Cash and cash equivalent as at 1st January 2019 and 2020. 2019 is minus $1,360,355. In 2020, $5,332,173. Cash and cash equivalent as at 31st December 2019, $5,332,173. 2020 minus $2,629,503. Thank you.
I think we can move to the final letter. First, let's go to
This section B. Section B.
Audit opinion first. Shall I read the opinion?
yes. Are we all there? Remember? Section C.
Section B.
Section C, page 7. The opinion is on section C, page 7. C. What is section C? Page 7. Page 7 of section C.
Yes.
Report of the independent auditor.
Okay.
Let's go ahead.
Thank you, Mr. Chairman and members. Our apologies first. We skipped the first paragraph, but we will print a copy and send it to them so they can replace the pages.
And include this.
Yes. But we have the subcopy, so I can read from the subcopy. Yes. It's only the first paragraph. I don't know, when we were printing, the printer skipped that. Yes. That's why you have that document.
That is the opinion side.
Okay.
Yes. So shall I read the entire opinion or the opinion on the basis of the opinion?
They read the entire opinion.
Okay.
Later, they can supply us with the omission.
Okay. Okay. Thank you. Report of independent auditors to the members of Gambia Printing and Publishing Corporation, GPPC. Opinion. We have audited the financial statements of Gambia Printing and Publishing Corporation, GPPC, which comprise the statement of financial position as at 31st December 2020, the income statement, statement of changes in equity, and statement of cash flows for the year then ended, and notes to the financial statement, including a summary of significant accounting policies. In our opinion, the accompanying financial statements give a true and fair view of its financial performance and its cash flows for the year then ended in accordance with generally accepted accounting principles, GAAP, and have been properly prepared in accordance with the GPPC Act. Basis for opinion. We conducted our audit in accordance with International Standards on Auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statements section of our report. We are independent of the entity in accordance with the International Ethics Standard Board for Accountants Code of Ethics for Professional Accountants ISBA Code, together with the ethical requirements that are relevant to our audit of the financial statements in the Gambia, and we have fulfilled our other ethical responsibilities in accordance with these requirements and the ISBA Code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Material uncertainty relating to going concern. We draw attention to note 26 in the financial statements, which indicates that the corporation incurred an operating loss before tax of $1,479,674 and $7,168,369 during the years ended 31st December 2020 and 31st December 2019, respectively. Also, as of that date, the company is in a net current liability position of $18,510,045 and a negative retained earnings of $2,093,792. As stated in note 26, these events or conditions indicate that a material uncertainty exists that may cast significant doubt on the corporation's ability to continue as a going concern. Our opinion is not modified in respect of this matter. Other information. Management is responsible for the other information. The other information comprises the general information and report of the directors as required by the GPPC Act. The other information does not include the financial statements and our auditor's report thereon. Our opinion on the financial statement does not cover the other information, and we do not and will not express any form of assurance conclusion thereon. In connection with our audit of the financial statements, our responsibility is to read the other information and in doing so consider whether the other information is materially inconsistent with the financial statements or our knowledge obtained in the audit or otherwise appears to be materially misstated. If, based on the work we have performed, we concluded that there is a material misstatement of these other information, we are required to report that fact. We have nothing to report. Responsibilities of management and those charged with governance of the financial statements. Management is responsible for the preparation and fair presentation of financial statements in accordance with GAAP and for such internal controls as management determines is necessary to enable the preparation of the financial statements that are free from material misstatement, whether due to fraud or error. In preparing the financial statement, management is responsible for assessing the corporation's ability to continue as a going concern, disclosing as applicable matters relating to going concern, and using the going concern basis of accounting unless management either intends to liquidate the entity or to cease operations or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the corporation's financial reporting process. Auditor's responsibility for audit of the financial statements. Our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but it's not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if, individual or in aggregate, they could reasonably be expected to influence the economic decision of users taken on the basis of these financial statements. As part of an audit in accordance with ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risks of material misstatement of the financial statement, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than for those resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentation, or the override of internal control. Obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the entity's internal control. Evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. Conclude on the appropriateness of management's use of the going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists related to events or conditions that may cast significant doubt on the entity's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the financial statement, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to date of our auditor's report. However, future events or conditions may cause the entity to cease to continue as a going concern. Evaluate the overall presentation, structure, and content of the financial statement, including the disclosures and whether the financial statement represent the underlying transactions and events in a manner that achieves fair presentation. We communicate those charged with governance regarding, among other matters, the plan, scope, and timing of the audit, and significant audit findings, including any significant deficiencies in internal control that we identify during our audit. That's the conclusion of the audit report. So we can move on to the management letter.
Thank you.
Okay.
Section C1.
B.
I just want to observe in presenting the management letter.
Okay.
Since this is just a presentation,
Okay.
we'd like to go into high risk areas.
Okay.
Then we don't even need a management response for the time being.
Okay.
Since these presentations are going to be subject to
Review.
consideration, and
Okay.
this is where we plan this thing and management response.
Okay.
Then we look at it. So you can look at the high risk areas and go further.
Okay. Okay. I'll explain the risk basis. We grade our risks based on grade 1, 2, and 3. 1 is the higher risk one. So I'll just read I'll just read the ones which are graded 1.
One, yes.
Okay. The first point is insurance and is graded 1.
Wait, we're page 4. Section. What section is page 2? Are you there? Yeah, section B, page 2. The management letter, page 2. There's only the elements that are graded with 1. That's our risk. Are we all at page 2? Yes. Yes.
Okay. Thank you, Mr. Chairman. That's property, plant, and equipment, insurance. Okay. Observation. During our review, we noted that the insurance cover for the fixed assets is not adequate, exclusive of the motor vehicles. Building and structure insurance cover $7,213,240, 50 buduts. Asset net book value $26,814,911. We have a difference, like a shortfall in insurance cover of $19,601,670, 50 buduts. Stock in trade insurance cover $4,249,120. Asset net book value $7,909,300. $300.06 bottles, with a net difference of $3,660,180.60 bottles. Machinery breakdown, 9 million, that's the insurance cover, $9,972,608.25 bottles. The assets net book value, 30,887,226, with a shortfall of $20,914,617.75 bottles. Implication: inadequate insurance cover for fixed assets would expose the corporation to high risk of financial loss, as they would be liable to full the cost of recovery if burglary, fire, or other disasters occur. Recommendation: we recommend that fixed assets be adequately insured to mitigate these risks. So the other point is observation 3, which is on page 4, which is graded 1. That is payroll and stated deductions. Yeah. Observation: Social Security payments were not made during the period under review. Also, all the income tax payments during the period were not made on time. Implication: late payment of state deductions to the authority exposes the corporation to penalties and charging, causing financial losses which could have been avoided if payments were done on time. Recommendation: we recommend that management should ensure payments are made on time to avoid the risk of penalties being imposed on the corporation. The next point is, the next page, page 5, receivables. That's observation 4. It's also graded 1. Observation: after date payments were not received from some of the debtors, balances are shown below. It's a long list. I think we can skip reading that. Okay, implication: this could expose the corporation to high risk of irrecoverable debts, thereby leading to financial loss to the corporation. Recommendation: we recommend that a follow-up should be made to these debtors to recover their outstanding balances. Next one, receivable ex-staff, page 7, also graded 1, observation 5. Observation: during our review, we noted that the following former employees are having an outstanding loan balance and still do not make any payments during the year, with the list provided. Implication: this would expose the corporation to a high risk of recoverable debts, thereby leading to financial loss to the corporation. Recommendation: we recommend that a follow-up should be made to these debtors to recover their outstanding balances. The next point is page 8, payables after date payments, also graded 1, that's point 6. Also, there were no after date payments for the following trade and other payable balances as at the end of the year. These are liabilities which were not paid. The list is also provided. Implication: late payment of suppliers' invoices could lead to misunderstanding or distrust with suppliers and affect future trade relationships. The corporation may be refused future credit, which could compound its cash flow situation. Recommendation: management should ensure that suppliers are paid on time going forward, and repayment of existing outstanding invoices be renegotiated to suit both the corporation and affected suppliers. The next point is on page 12. This observation 9, internal audit unit or department. There are various items or observations. Audit plan. We noted that the 2020 audit work plan prepared by the internal auditor was not approved by the board audit committee. Vetting of payments. We also noted the involvement of the internal auditor in the pre-auditing of payment vouchers. Ideally, the internal auditor should not be implementing control processes. Presentation of reports to the board of directors. Based on our review of the board minutes and discussion with the internal auditor, we gathered that internal audit reports were presented to only one board meeting, that was audit committee, in the year 2020. Manual. We requested for but not presented with an internal audit manual. Implication: audit plan. Without the blessing of the board in the drafting and finalization of the plan, it would be difficult to confirm if their wishes and aspirations for the corporation in terms of governance, risk management, and control have been considered in the plan which was implemented by the internal auditor. Vetting of payments. Pre-auditing denotes assuming management's responsibility, which could impair the unit or department's objectivity. Presentation of reports to the board of directors. Without quarterly updates by the internal auditor, the board of directors may not be fully aware of control lapses, governance, and risk management issues on a timely basis. Manual. Without the manual, there would not be any comprehensive guide for the operation of the unit or department. This could affect its efficiency and effectiveness in meeting and exceeding expectations. Recommendation. The board of directors and senior management should ensure that audit plan, internal audit work plan be approved by the board of directors. Vetting of payments. The internal audit unit or department should not be part of the payment process. Preparation of reports to the board of directors. The board should encourage the internal auditor to present quarterly reports on the audit findings based on the approved plan. Manual. The unit or department should develop a manual to guide its operations. Page 15, board matters. That's governance issues. That's observation 10, also graded 1. Observation. We noted the following from our review of board-related matters. There is currently no term of reference (TOR) for the board, covering all aspects of their operation beyond those reflected in the in the GPPA Act. The GPPC Act. The board should meet every 2 months as per the Act, but only 5 minutes were provided for our review. The audit committee met only once during the year as opposed to quarterly. Only 1 senior management meeting minutes were presented for review as opposed to 12. Only 1 finance and audit committee meeting minutes were presented for review. The production committee hasn't met throughout the year. We could not see any evidence of follow-up on the implementation of both the external and internal audit implementation in the board minutes. We could not determine from the review of the board minutes if the various department heads were invited to present their activities reports covering the period of the board meeting apart from the director of finance who presents the management accounts. Implication. Without a comprehensive TOR and given the not so elaborate nature of the activities of the board are described in the Act, it could be difficult to fulfill all its obligations effectively. Also, matters which require board consideration could be inadvertently delegated to a member of the board, such as the chairman or the managing director. Recommendation. The board should ensure the following. It has a comprehensive TOR specifying how it should conduct its activities, meet every 2 months as required, should monitor the implementation of the auditor's recommendation in the management letter, discuss and approve the internal auditor's annual plan and monitor progress on its implementations during the year, to invite respective department heads to brief the board on their activities covering the meeting period, consider activating its subcommittees such as audit, risk, and production committees to deliberate on issues such as control, risk management, and governance and report to it. These are the current areas. The rest are review of matters raised in previous months. Yes. Thank you.
Thank you so much, Chair and the team, honorable members, the auditor from the audit department. Thank you, and I think we have come to the end of the presentation. You will be coming here on Thursday, that is 24th of July 2022, at 2:15 for consideration. I only want to observe something like it's unfortunate today we start late. I know certain issues are beyond our control, but we should endeavor by Thursday for us to be here by 15. This is going to be consideration, and we have two major activities double consideration. So we want the entire team to be here on time so that we can bring it as feasible, whether we are going to approve it or not. But it's interesting for us to put certain things into consideration, especially when Parliament slates a date for a team to appear before us. It's also very important to give a due consideration to that one too. Members, we are here on time and we have changed our venue to this venue as a result of my honorable board chairperson being late. So we have to at least adjust that and look at it. We cannot come from that far to be seated already waiting for the board. I know sometimes it could be beyond our own control. So on that note, I want to officially close this meeting till Thursday, 21st of July at 2:15 p.m. prompt. Thank you. Do you have, Butcher, do you have anything to say?
Well, I would like to probably tender my apology for the inconvenience.
You're welcome.
As you said, sometimes these are substances beyond one's control.
Yeah.
And I sincerely tender my apology.
Apology accepted on behalf of my committee. Thank you. Can someone move the motion we adjourn till tomorrow? No, tomorrow we are having another session. Okay, no problem. The yes. Okay. The finance director or the auditor?
No, the finance director
Okay, the soft copy. Huh?
of the reports.
Okay. Thank you, Honorable Chair. We want this email to be given to the finance director to supply us with the soft copies of the reports. Yes. Yes. It has been moved and seconded that we adjourn till tomorrow 10 a.m. prompt. Those in favor, please say aye.
Aye.
Those not in favor, please say no. The ayes have it. Thank you. We call it. You're welcome.